All right, back in the action here once again, and boy, does it feel good to be alive here on a Monday evening. Hope you guys had a great weekend. Happy Mother's Day weekend. All the moms out there, too. Hope you guys had a great time with Mom over the weekend. But we're back in the action here once again. Quite the busy day to talk about here today. And, of course, as always, it's about that time of day again. It's Monday evening. What is it? May 13th, 2019. My name is Joseph, by the way. And this, of course, is your nightly newsletter. Now, don't forget, guys, I help traders find predictable, dependable, profitable trading opportunities using a simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight is a little bit different. My job tonight is to identify the best setups, the best levels, the best opportunities, the high-quality setups that we're watching for tomorrow. That's Tuesday's trading session. And tonight we're going to grab oil, we'll grab some S&P, we'll grab that NASDAQ, that gold, and of course, how can we forget about that mighty euro? Rep tonight on that 6E as well. So crude, S&P, NASDAQ, gold, and euro in tonight's video. I'm going to jump in here on oil because I'll tell you, oil is just trying to throw us a curveball, and I want to make sure you don't become a victim of that curveball right tomorrow as well. Let's jump in here on the crude oil market. First things first here. Get that out of the way there. Jumping into crude here tonight. First things first, obvious big bear move down on oil. And of course, anytime I see a big strong move in one direction, right, I always expect to see another leg, right? But we're bearish here in the short term, but there's one big problem. We've got that trading range, right? If you look left here, I'm gonna dig into this a lot more tonight on the video, but if you look left here, right, there's a big old range over there, right? And of course, a range tells me what? Buy low, sell high, avoid the middle, right? So I want to buy down here, right? I want to buy down here. I want to be a buyer going back higher. But as you can see, though, we've got two worlds colliding here right now on oil. I have all the sellers, right, beating their chest, right? I'm assuming going to be trying to sell some pullbacks here, maybe get down to that big round number. But at the same time, we've got those range traders, and they're not going to make it easy on us, right, to sell. They're going to want to go back into that range. Personally, what I'm looking for is I'm looking for either a completion of that move, then a short covering rally, or I'm looking for a failure here back up into that trading range. I have a lot to cover here tonight on this crude oil, but whatever you do, be very, very careful trading oil until you finish up watching tonight's video, because we've got two worlds colliding, a range-bound market and a trending market. Which one do you think is going to win this battle? I know what experience tells me. I know what history says, right? And I'm going to talk about that tonight. Which type of market, right? Range-bound market or trending markets, which ones are more important? What to focus on? We're going to dig into that in a lot more detail here tonight on the video. Over on the S&P here tonight, right, the S&P obviously is a bear market down right now. The problem, though, is I'm sure a lot of people look at this and they probably think, okay, it's like a spike in channel here. But you'll notice, right, that spike in channel didn't exactly work very well because I don't think it's a spike in channel. I think we have a range in here on this S&P. Not as easy to see it until they came back and gave it a little bit of a kiss there, right, later on this afternoon. But what does a range tell us? A range tells us to buy low. It says sell high, right, and avoid that middle. Obviously, we're very bearish right now, right? Obviously, we're bearish right now. So I'm not too keen on just calling a buy because we're below this range. But I do think, though, that if we can complete this major objective down below this big round number, I think we get a great opportunity here for a short covering rally if we can get this market a little bit more overextended to the downside, right? Go back and look at last Monday afternoon and you'll see what I'm talking about, right? Now, at the same time, though, I am going to bring in a little bit bigger picture here because there is some really interesting bigger picture looks, right, at these charts right now. One being a larger channel that we're tracking here as well. I don't usually talk much about the bigger picture, but in this case, though, it does apply here a bit because, again, if I can get some overextension here, we might get a shot to be a buyer going right back up. But then obviously I want to try to sell up here, right, back down into that range. So buy side, yeah. Sell side, absolutely yes. And we're going to put that plan together and make sure we kind of know, okay, what do we need down here to be a buyer? And then at what point will I know it's safe to to try to sell it because this could really get pretty aggressive going higher here. We're going to break that down on the S&P here tonight. Over on the NASDAQ here. Now, NASDAQ's a lot tamer. NASDAQ, you'll notice here, looks a lot easier than, right, the S&P. NASDAQ, again, right, strong move down into what I'm sure a lot of folks would call that a spike in channel. The problem, though, is it doesn't really fit like a spike in channel. It looks more like a range, and we'll talk a lot more about why I think that in just a moment. And you can see, right, anytime we go below the range, right, buyers are waiting to buy it right back up. So again, it's a bear market right now. I'm not too keen on calling it a bull, right, for a buy here. But I do think, though, if we can get into some key support levels down here, I do think, though, we might find our way back up into that range. I've got a very specific pattern I'm looking for on this NASDAQ to be a buyer on this. And then again, you know, obviously I want to sell up here, right? I want to sell up in that battle zone area. We'll talk about the patterns. We'll look for that tonight on the video. But then I'm also watching some bigger picture stuff, right? Some bigger picture stuff. I don't think being a buyer up here is going to be very, very easy, and I'll talk about what my plan is here on that NASDAQ. So a lot to cover there on the E-minis. Over on the gold tonight, that yellow metal, it's definitely quite obvious. The trade tensions here between U.S. and China are picking up, right? You can see the market taking shelter in gold. Lots of volume today, lots of bullishness, as you can see. Not even a single pullback here until about lunchtime here on gold. This is a pretty basic scenario, right? I've got a strong move up, right? What do we call that? We call that a spike, right? We call that a spike. What does spike tell me? Spikes always tell me to look for one of three scenarios. I'm going to talk about which of these three scenarios I think we have, and then I'm going to show you how I want to group together this big channel, right? What does that big channel and this tiny trading range have in common? We're going to grab a look at that tonight on the gold here, because only on this newsletter will you find that major channel, right, and that teeny tiny little trading range there. They're both very, very important clues. I'm going to break that down on the yellow metal here tonight. And then possibly the most saturated of all the big clues and all the big learning opportunities. If there's one market that you stick around for tonight, this is definitely one of them. This is the euro, the 6E, the euro currency futures, obviously, not the Forex pair. But there are so many important factors between major resistance, a trading range, a hidden channel, right? And so many little clues in this chart right now. I want to be a buyer. I think it's pretty easy to see we're bullish right now on this euro. I definitely want to be a buyer on the euro, but I'm going to use the combination of this channel and this trading range to really give me a good idea for where specifically I want to be getting long here for tomorrow. You will love this section of tonight's video, because there's so many pieces to this that really are great for new traders. So make sure you stick around for the euro here tonight, because we're going to break this all open, right? I got the euro, gold, NASDAQ, E-mini, and of course that oil market as well. But before we jump into those charts here for tonight, I want to make sure that you never miss another newsletter. You know, we publish these newsletters on our YouTube channel and here on our blog every evening, Monday through Thursday. We've been doing it since 2008, as crazy as that sounds, one of the longest running newsletters. The bottom line, though, is, right, there are actionable opportunities setting up right after I set up this newsletter and publish the newsletter every night. So I want to make sure you never miss another great video. To do that, join our mailing list. All I need is your name, your email address, hit that subscribe now button, and then once you verify your inbox, right, grab that verification email. I'll send you an email every evening. You'll be the first person to get that heads up on this nightly newsletter, right? Right before I publish the video on our YouTube channel, I always send out that email to all of our members of our email list. So all I need is your name, your email address, hit that subscribe now button, and then remember, you got to check your inbox for that verification email. And then I'm also going to send you a welcome email as well with a lot of goodies in there. If you don't find the email, check your spam, check your junk, check your promotions folder. Sometimes those emails can get sidetracked somewhere, right? If you're in Gmail or AOL or Hotmail or Yahoo, whatever the email services are that you're using these days. So check your spam, check your junk, and make sure you find that verification email. Then one more thing here, guys. I need your help. I always need your help. I'm always trying to make this a better place to learn and earn. I provide a lot of value every night on this newsletter, but I want to make it better, and I need your feedback. What do you love most about the newsletter? What do you hate about the newsletter? What's your favorite market? And by the way, do you watch the whole entire video, or do you just skip right to your favorite market? Do you watch this at night before you finish up? Do you watch it before you trade each morning? Right? How do you use it? What's your favorite part? What's your least favorite part, right? I would love to know. Drop me some comments in the comment section below. What's your favorite market? What's your favorite way to use it? I am always listening, and I'm always so thankful that you guys will give me some feedback below that video. And then don't forget, while you're down there, if you watch the video every evening and you love the nightly newsletter, give me a thumbs up, will ya? That thumbs up on the YouTube video really helps expose this video to more and more traders. That way they can learn and earn along with us every evening as well. And then don't forget, one last thing. If you have any questions, any concerns, any comments, any feedback, I'm always here. Pick up the telephone, use that live support tool, call me anytime here in the office. I'm always here, and if I'm not here, it forwards to my mobile phone, so it's always very, very easy to call the office and get the real, honest truth from whatever topic, right, you have questions about. So instead of going out there onto YouTube land and searching for unreliable information on other YouTube channels, right, pick up the phone, give us a call. We'll answer all the calls, right, answer all your questions, and give you all the information that you need to know. I realize I'm old school. I actually talk on the telephone. People call the phone. I answer it. I answer questions. No chat bots, no call centers, no robots, right? I know it's 2019 and most websites are all automated these days, but I'm old school, right? I run my business by working directly with my clients, as crazy as that sounds. So drop me some comments below the video tonight. Give me a thumbs up, subscribe to our YouTube channel, and call me if you have any questions, all right, guys? Because I'm always here, and I'd much rather have you get the right information from me, right, before you go wasting your time on the interwebs. All right, let's jump in. Taking a look here right now at the calendar here for this week. This is the third week of the month, right? Third week of the month. Now, you will start hearing people talk about options expiration later on this week, right? You will hear a lot about that. I don't think you should buy into it too much. There's not much you can do about options expiration. Towards the end of the week, you will see a little bit more volatility, but honestly, if I didn't tell you it was OPEX later on this week, you probably wouldn't even know it was there. So don't get too worked up about the third week of the month, right? Options expiring. Just trade the darn patterns, right? Just trade the strategy and you'll be just fine. And we'll talk about that strategy in just a moment here as we dive into our charts. The big obvious, right? The big elephant in the room right now, though, is looking at tomorrow and the rest of this week. There are ultimately two big themes that are going on right now in these markets. One of them, right, is the China-U.S. trade negotiations, or as a lot of the news media right now wants to call it, a full-blown trade war. The second big theme this week is going to be oil and Iran, right? Of course, applying to the energy markets, right? The oil market, obviously. Talking about the U.S.-China trade negotiations. We talked about this last week, if you recall, right? They kind of broke down towards the end of last week. And as of this morning, you've got the U.S. and the Chinese, right? Tit for tat, tat for tit, back and forth. Oh, you want to tariff this? We'll tariff that. We both know, everybody knows, the news media is going to blow this so far out of proportion that, remember last week? Last week, we saw exactly what's probably going to happen this week. We saw a big tumble down at the beginning of the week And then what happened? It came all the way back up and wound up finishing right where the week had started. So we know the news media is just foaming at the mouth right now over their ability to sensationalize this and try to scare us half to death. Your job as a trader is to close up those websites, ignore, try your best not to let those headline news reports get under your skin. I'm not saying it's easy. Whether it takes a full fast, right, a news fast, right, if it takes full abstinence, right, from news this week, whatever it takes, do not let these headlines, right, make you think the world's coming to an end, because they're going to try to, and thus make you trade differently than you normally would. That is your biggest job this week. Okay? Yes, there is some negotiations going on back and forth between the U.S. and China. China needs the U.S. The U.S. needs China. They can do the tit-for-tat stuff all they want, but at the end of the day, though, there's an election coming up in the U.S. The Chinese economy is not as robust as they want us to believe, and both sides know it. They're going to figure out how to make this work. In the meantime, though, it's going to get a little bit ugly. You have to just understand that. And of course, the news media, they're going to do their job and lie to us and make us think the world's coming to an end. Our job is professional and make sure we ignore it. Okay? That's all we really can do right now about the U.S.-China trade deals. There's nothing we can do besides just sit tight, stay patient, be disciplined, turn off the television set, right? Because they're all lying to us, and trade the darn charts. Right? I'm going to make it that much easier on tonight. Get rid of all that clutter. Get rid of all the distraction. Now, the other, of course, right, the other impact here this week is the issue happening with the oil markets and obviously Iran. Now, of course, I'm not going to go into too much detail about this, right, but the big theme right now is Iran has sanctions because of their nuclear policy, right? They won't shut down their nukes. A bunch of different countries are imposing sanctions. Those sanctions are trying to ultimately choke out the biggest revenue for nuclear, right, sponsoring, which is oil in Iran. Okay? The Iranians, of course, are saying, screw you, I'm not going to do that. They're trying to work the way around. And just today we heard about, some cargo ships being hijacked and whatever, right? You saw how fast oil went up and then right back down. You can tell the way the markets are acting right now, they're not really that concerned about it, or else we would have finished on the highs today, right, for the oil markets today. So again, you know what's going to happen. The news media is going to make this sound like oil's going to 100. Your job is not to believe them. Okay? It's that simple. Your job is to believe one thing, and that is the chart. I'm going to show you how to put those charts together here for today. Okay, so it might be a little bit rocky here this week because, again, with the news, right, the news sensationalization of these two big themes, the China-U.S. trade negotiations I can't guarantee anything, obviously, but I can almost guarantee they're going to find a trade deal, right, eventually. It may be a little bit ugly, and the news media will make it sound bad, but they will find a deal. Oil in Iran, it is what it is, right? This could get a little bit ugly back and forth, and there may be some bloody altercations here and there, right? But again, trust the chart. The chart is the only thing that you're going to trust here as we go into this week. And I'm very serious about, if it takes going complete cold turkey off that news this week, then that's what it takes. Just focus on those charts. Now, knowing that, is there anything on the schedule here for tomorrow? Nada, right? There's nothing tomorrow on the schedule, which means the news cycle will dominate tomorrow's price action. My best advice to you will be to turn off the news. You know what they're going to be saying, right? China did this, U.S. did that, right? Iran did this, OPEC did that. Who cares? Trade the chart in front of you. Trade the chart in front of you. Okay, want to make sure I got that out of my system here. I'm getting a lot of emails. I'm getting a lot of Skype messages, a lot of chat back and forth going, what do you think? What's going to happen? What's your plan for it? I'm going, what's my plan? My plan is what I do every day. Just trade the darn patterns, right? Because if we get a good pattern, it's probably going to work. If we don't get a good pattern, then wait. Simple as that. We can overcomplicate this, right, or not. Later on this week, we will hear from retail sales, right, housing starts, right. So we have some big news coming later on this week. Then, of course, OPEX, right, on Friday. Again, a little bit more volatility as we go later in the week. But I mean, what do you want? More volatility than we're getting right now? So it's probably not going to be that big of a difference as we go into the rest of this week. All right. Now let's get to some charts. I know that was way overdrawn, and I apologize about that, but again, I want to make sure we're all on the same page here. That yes, there are going to be some really gross headlines in newspapers, and no, we're not going to care an ounce about them. We're going to wait and see how the market responds and trade the market, not the news reports. Next up, jumping into our charts here, we got oil, S&P, NASDAQ, gold, and euro. First of all, it's about that time of the month again on the oil markets. Don't forget, oil loves to roll over between the 15th and the 18th of the month. Okay, my kind of routine is every month around the 15th of the month, I start to really kind of look at the volume on the current front month. We're on the 619 right now, and then I compare it to the 0719. Now, we're still a ways away on this. I don't want to make this sound like tomorrow we're dealing with rollover, but just be aware, towards the end of this week, we're going to probably see signs of contract rollover, which means lower volume on the 619, and that volume will then move over to the 719 contract. I'll keep you posted on this as we go, but simple solution is once you see there's more volume being traded on the crude oil 719 contract, that's when we'll make the move over to that next front month. We're not there right now, but be aware, around the 15th, 16th, 17th, 18th of every month, you're going to want to make sure you're keeping an eye on that volume. And again, I'll make sure you're on top of that, right, if you trade with us every morning in our trade room. Now, jumping into the actual price action here, we can definitely see this market is bearish right now. And in a bear market like this, I'm very tempted to look for a level of resistance to sell off of. I draw off trend line, down off these lows, beautiful fitting trend line you can see there, beautiful trend line. And then of course, once I have that trend line, I can pop it back up at these highs, and I can find a beautiful spot here right now to be a seller. Okay, so that's a great spot to be a seller if this was the only part of the story, right? What's a much more important aspect of this though, you look left, this ain't no trend, right? This is a range-bound market. If you recall from last week, we had those lower highs, those higher lows, and we talked about buying low. We talked about selling high, right? Buying low, selling high, and sure enough, what happens, right? We get that news headline overnight this morning that says there was some shipping cargo container, right, that was mistakenly hijacked or some altercation. It doesn't matter. It really does not matter what happened. All I need to know is we saw crude jump out of that range. This is why I'm saying don't get too wrapped up in the sensationalization of all these events right now, because if this market really thought there was a drought in oil, if they really thought the Iranians, the lack of their oil was really going to be a big deal, well, look where we are. We wouldn't be closing back down here right now. The markets are always right? They know better than any scoop from CNN, right? I'll tell you that much right now. And so we know that with that market running up based on news, and then collapsing based on the lack of real fundamental reason why that market was moving that higher, it confirms, first of all, don't believe what you read in the newspaper this week, right? And second of all, we are still very much intact in that trading range. So now we know the market goes up, slams right back down. What does a range tell me? A range tells me to buy low, going back into the range. It tells me to sell high, going back into the range. Where am I right now? I'm below the range. So even though we have a very strong bear market, there is no doubt about that, right? There's no doubt about that. We are very strong here right now, right? Going lower on this. The reality is, hold on one second, get that out of there, right? The reality though is that those bears, right, their time is most likely numbered here because they're right below the low of this range. So how do I buy this market even though the sellers are clearly, right, intact right now? There are basically three scenarios I'm looking for right now on the oil. Maybe four, right? All to be a buyer, okay? Here's one scenario. One scenario is actually happening right now. It's a crown reversal. Right? A crown reversal, one of my favorite, really my only reliable reversal pattern. It's a crown reversal pattern. It's a strong move down. It's a higher low. That higher low now gives us the opportunity now to buy with a trap now right below that low. if you watch my nightly newsletter every evening, right, we look for one try, we look for two tries, and we look to buy off that trap. That is right there, right? That is right there. That is a beautiful crown reversal setup right now. And all you need here at the opening bell here this evening is that nice, strong signal candle, right? So one setup I'm watching for right now is that crown reversal. Strong move down. Let the bears try once. Let the bears try twice. Notice how they get the little trap low here. Then what you want to see is nice strong signal, and we're buying back into the range. Again, we call these crown reversal patterns, or what you've also heard me call them is a nested failure pattern, right? Kind of the official name for it is the nested failure pattern. Now, speaking of failure patterns, a more conservative opportunity here to be a buyer right now. I mentioned this move going lower. Right. I also mentioned the fact that if I was a bear on this, I would connect these lows, bring it up to this high now, and I'd be looking to sell right off that high. Okay, that's where I think a lot of sellers are going to be waiting. Personally, I think a lot of bears are going to be waiting above this 61.36, combining that trend line, combining the low of that range, and I think you're going to see a lot of sellers try to sell this thing off that battle zone. Now, what I'm going to look to do is literally buy right into their stop losses. So imagine now we go higher. We see those sellers now try to sell back down again. Now I've got a trend line I can draw in, right? And that trend line now gives me the ability now to buy going back into that range. But here's how you want to think about it, right? At this point right now, if I can get sellers to commit to try to selling off the top of that channel, then I know where their stops are. Right? If I can get sellers here to commit selling off the high of that channel, I know exactly where their stops are. Right? Their stops now are sitting right above that high. And I already know I want to buy below the low of that range. So that's definitely something I'm watching for here tomorrow, right? I'm definitely watching for that buy, but I'm buying, though, right into the stop losses, right, of those sellers. So right into where those stops are sitting, right? That's where I want to buy. That's the second scenario, right? So the first one's going to be that crown reversal, right? That lower low, nice strong signal to trigger the entry. The second scenario is going to be a seller failure pattern, right? Coming off a trend line, buying into the stop losses, right, for those sellers. Okay, now where would my target be on that? One target obviously is the opposite side of the range. What about the next target? Easy. Take the size of that range, take the amount of the move below the range, then bring it up, and that will give you the objective going back in the opposite side, right? So just a quick little glance at it, and you can see here up at the $63 a barrel, right? So the amount of the move below the range turns into the amount of the move above the range. We call that the pendulum swing, right? The pendulum swing. Now, I mentioned one more scenario here. The other scenario was if they finish off this leg, right? Because they might get it. We might see this come up, and they may pile drive this thing lower, right? You know, remember, anytime you see a strong move in one direction, you're going to definitely see a lot of sellers most likely trying off of that trend line. Okay, so what if they do get that move back up? Or what if they do get that next leg lower? Then what do we think? Are we now a trend? No, right? Now we're just a little bit lower inside this range. That's all it is, right? We haven't seen the successful breakout. We'll talk about what a breakout looks like in a moment here, right, over on the E-minis. But right now, though, if I see that next leg lower here and we go lower, I'm still trying to get this sucker back up into that range. And to do this, because the market is so bearish overall, how many times do you think the sellers are going to try before they give up and become buyers? Well, usually in a bear move like this, the bears will try once, they'll try twice, and then we'll get that nice easy rally going higher. And that's exactly what I'm going to do. I'm going to look for the sellers to try once. Those will be the rookie sellers. Then look for the more experienced sellers, right, to try twice. And then once we have that second try, then I get my nice strong signal. Yeah, now we're talking right back into that range. Where's my target? opposite side of the range, and then again, make sure you get that big pendulum swing, right, going back in the opposite direction. So 3 ways right now to buy this oil, right, buying that oil off of this low. We talked about crown reversals. We talked about failure patterns, right? We talked about 2-try nested failures and the pendulum swing. I have so much more I want to share with you on this, but I'm running late on time already because of all the stuff we talked about at the beginning, right, during that news broadcast. So I want to keep moving. But if you want to get a much deeper dive on this, if you want to learn all the tricks we use every morning in our trade room with all of our best clients, grab that free course. It's right in the upper right-hand corner. I'm also going to put a big red button here for you guys right below the video tonight. It's right on the blog. Just scroll right down. Whether you want to grab that big red button below the video or in the upper right-hand corner, grab that information icon. Either way, get registered for that free course because that free course will bring you right up to speed with us. That way you know how I look at the markets, the strategy I use, and of course my favorite entry setups. Let's keep going in the meantime because we got a lot more to cover here tonight on this video. Over on the S&P right now, S&P is a bearish market. I think that is relatively easy to see on that one. You didn't need me to tell you that, did you? Right? It's definitely a bear market right now. Anytime I have a bear market, I'm always looking for ways to sell at resistance. And then I'll tell you, every once in a while, we see situations where we might be able to see the market oversold, so to speak. I don't really like that term, but overextended maybe, and they can look for a nice option to be a buyer in a bear market. So again, we're not always going to look for a buy side in a bear market because obviously it's not as reliable. But in this scenario, though, I definitely want to find a level of resistance that I could sell off of. But at the same time, though, I think it's obvious here right now. This market is very much oversold. And with the right setup, we may see a chance here to be a buyer here tomorrow as well. One of the big things, though, I want to kind of bring you up to speed on this is, and I don't do this very often because just because you don't need it, right? You really don't need to use these longer term levels here, but there is something definitely standing out right now on the S&P that I want to bring to your attention, and that is that long term move down, right? You'll notice, right, we go down, we go up, right, and this rotation keeps happening, right, back and forth. And really the most important thing about this is, no, I'm not telling you to buy because you're the low of this channel. Right? You can't just buy the low of a channel just because it's the low of a channel. It's way too bearish to be a buyer right now. So no, I'm not going to say, well, you're at the low of this channel, so guess you should buy now. No, that is not a reason to be a buyer here. It's not enough of a reason to be a buyer. It could be a definite odds enhancer, but you better have a couple more reasons to be buying than just the low of this channel. What really is the most important thing, though, is you'll notice we're getting these very strong, bold moves up into the top of the channel, and they seem to evaporate from there. So I think the most important thing about this channel is second guessing or giving it a second thought before you try to go buy right into the high of that channel. So I'm going to talk about kind of what we want to look for in a buy side, and then how we would sell off the top of that channel as well. So that big channel is a big important part of this process here this week. More importantly, though, right, as you break this down, you'll start to see what I mean here, because I think it's going to be an easy trap to fall into if this market does turn bullish. Got to be careful buying into the top, right, of that channel. So we'll talk about that here in more detail, obviously, here as we go forward. Now, as I mentioned earlier, I think a lot of people probably look at this as some sort of spike in channel here and there, but we saw this market turn into a range bright and early, right? Double tops, double bottoms, double bottom, double top. Anytime I see a double top and double bottom in a trending market, I know that range is going to be a big important clue, okay? And in my book, anytime I have a range on the chart, you can see it comes back to kind of give a little kiss there, the highs there later on this afternoon. Anytime I see a range on a chart, I always know that range is probably going to give me the most important clue. So it's really important that you learn to find ranges. And you'll learn all about ranges, by the way, inside that free course that I mentioned earlier. It's also linked up below us there as well. Most important thing, though, when it comes to a range, you want to make sure you identify the range, find your range expansions. For example, I take this trading range, I copy and paste it up, right? A symmetrical resistance level overhead. Again, these two levels are nothing more than me just simply taking that range 1 and 2 and literally copy and paste down. Then same thing, right? Copy and paste down, and you can see these levels of support. They hold very well, right? They hold very well. Okay. Bottom line is that whenever I have a bear, a trading range, I find the range, then I find my levels of support below and resistance above. Okay, I want to buy off those support levels below. I want to sell off those resistance levels overhead. Now, as we mentioned a lot last week, it really has everything to do about momentum. Momentum, for example, what was the market's direction before we went into that range? We're bearish. So I already know now that being a bear means obviously it's going to be a lot more reliable to be a seller in this market than to be a buyer. Most importantly, though, I need a different type of pattern to sell off the high as I do to buy off the low. Because the market is bearish overall, I'm going to use a slightly more conservative pattern to be a buyer, and of course our typical sell pattern, right, to be a seller. So let's break that down, right? I know we're range bound. I know we're bearish. Bear, right? Bear says sell above the high or buy above the low. Two different patterns. Now, I've also got a measured move on here. And I'm kind of blending together multiple variations of that strategy because normally you don't need to use a measured move when you have a range. But the reality is the range was a very small part of this trading day, right? It's a big piece of the clue, right? It's a big piece of the puzzle. But at the end of the day, though, I would imagine a lot of people are not going to see that range. They probably think it's a spike in channel. Right? I almost did too, but then once I saw this double bottom, double top, once you go double top, double bottom, you know you get a range. And so we know that range is most important. However, I'm hoping that we see these sellers try to get that measured move. You can see they tried already once, right? They already tried once and they failed. They may try it again. And if they try it again, I think we'll get a great spot there to start being a buyer on this. Okay, so sell side and buy side right now. Stay away from the middle. We can already see signs of a triangle here, right? All consolidating here as we go. So stay away from that middle. Now, what's the best pattern for me to sell above the range? To sell above the range, we look for simple failure patterns. In other words, I want to see the market go up. I want to see it pull back to the moving average. The buyers will try to buy that pullback. If they fail, I'm selling right into their failure, right? That's called just your typical two-try failure pattern. Now, if we go lower here, this is where we have to be a little bit more finesse. We've got to be a little more careful, a little more conservative. What's the best way to get long off the low in a bear market? We just saw one on the oil. It's that, right? It's that 1, it's that 2, and buy back up, right? That 1, that 2, let those bears, because again, right, look back here, right here. Good example right here, right? Strong move down. We're below the range. We want to buy. So what do? We let the bears try once, let them try twice, then we buy up from there. Because those sellers, they're not going to give up after the first try. They're going to try again, right? So try again, let them try again, and buy into their stops. Right? So as we go lower here now, look for the 1, look for the 2, and then we're buying up from there. It's a bear market that is, and again, I don't like the word oversold, but it's overextended trying to get that measured move. The range is the most important clue. Now, once I get that 1 and that 2, now all I need is the proper signal candle. You'll learn all about that in the free course, right? And market will rally going back higher here. Okay, perfect. So that's the kind of reversal. That is the failure off the low to be a buyer. What about being a seller? Now, being a seller, there are lots of different ways we can be a seller on this. Most important thing is know where your range is, right? Know where your range is. The reason I say this is because it'd be very easy for me right now to get stuck trying to sell up here, right? Trying to sell there. That's not where you want to be trading. You want to avoid that middle. Avoid the middle at all cost. You want to wait for this market now to get that move back up, right? Let those buyers here now. Let those buyers now. Hold on, get rid of that color there. Let those buyers take it back higher. Moving average comes over. The buyers now try to buy that pullback. Again, probably trying to go up right into that overhead trend line. We now know it's a bear market. It's not a bull market yet. Okay, we'll talk about what it means to reverse directions in a moment here. But most important thing, though, is now we know where stops are, right? Now we know right where those buyers have their stops, right? So now the market runs up. Moving average comes over. The buyers come back. They're trying to buy that pullback, right? Thinking this is a bull market. Okay, and what do? We know where stops are, and we're selling into those stops. A classic failure setup. Now from there, don't chase the move lower. We don't want to trade the middle of the range. Wait for the moving average now to come over and sell the pullback. That's the next great opportunity. That's called a two-try failure, right, into a breakout pullback. Okay, two easy setups there that we can use to sell off that high, right? But I know what you're thinking, right? What if they take it and run, right? What if they really take this thing and run? This is where things get a little bit dicey. This is where things, if history repeats itself, we're going to probably get a big move up and then right back down again. If that's right, if that's what we get, here's how to trade it. First of all, how do we get a reversal? What does a reversal even look like? It's called the 1, 2, 3 reversal. So again, imagine now we go higher here. Big, strong move up. Okay, that counts number 1. Then, number 2, a pullback to the moving average. Okay, that's number 2 of the 1, 2, 3 reversal. Then, number 3 is a strong move off the moving average. Right? Strong move off the moving average. That's what turns the market bullish. Okay, that's what turns the market bullish from there. Now, when I get a 1, 2, 3 reversal, 1, 2, 3 reversal, what do? We mark up that high. We mark up that high. We bring it down to that low. And what do? We find that sweet spot. The sweet spot is the high of that move, the low of that channel, right? If you watch our newsletter every evening, this is nothing new for you. And we look to buy that pullback from there. But again, we've seen this a couple times over the past few weeks, right? Or the past week and a half at least, right? We get that overhead trend line overhead. So what would be some key components here to sell it, right? How would I sell that move now? What you'll do is knowing that we have those buyers coming in, let them try once, let them try twice, and here's where you want to get that same crown reversal pattern that we talked about on the oil. Because that momentum will be so strong at that point, you're going to really want to make sure these buyers try once, try twice, and also because you've got that possible channel there, you really got to make sure you get that trap high and before dumping it back down into that range. Again, this is the exact opposite pattern, right, that we talk about on oil for that crown reversal setting up the long side right now, right? It goes up. The buyers, of course, they try to buy it once. We're not going to try to sell into a bull market at that point. Too bullish at that point now. Let them try twice. Once we get those bears trying once and trying twice. Trap high, nice strong signal, back down into that range. This may be the big money trade of the day tomorrow, right? We got to wait for it. Okay, then what if it keeps pushing through? If we keep getting that push through, wonderful, right? If the market can get through the top of that channel, right? Imagine now that 1, 2, 3 go. If we can get through the top of that channel now, if we can get through it and go, perfect. Now, once I see that push through it, now I can get ready to start buying on those pullbacks tomorrow as well. But until we can get that proof going to the top of that big channel, it's just, again, if you look left, you can easily see what's happened. Let those buyers work themselves into a frenzy up here, and we'll dump it right back down with the right pattern. So now we've got that covered here, right, on the S&P. Again, I want to get us oversold, the 1, the 2, and back up, or the move up, the failure and back down, or the 1, 2, 3. Nah, might not want to buy that just yet, right? 1, 2, trap and dump it back down, or 1, 2, 3, mark up that new channel, and we're buying above the top, right, of that trading channel. Those are scenarios we're watching for here tomorrow, right, on the S&P, right? What if it goes lower, right? What if it goes lower? Well, let's talk about that on the NASDAQ, because I'm going to look for the same thing, right, on that NASDAQ. Over on the NQ here tonight, right, NASDAQ is very similar to the S&P, but quite different, as you can see. Lot simpler chart here. The S&P was quite, right, the ugly market here today. Again, strong move down. Obviously, we're bearish. I've got one leg. I've got two legs on this. NASDAQ doesn't quite have that big channel that we're talking about on the S&P. NASDAQ's been a bit of a moving target as far as which of those channels are going to work best for us tomorrow. But what I'm thinking about, though, is taking that channel low up to that high, and I'll bet there's going to be quite a bit, right, of sellers waiting up around the high of kind of like that hidden channel almost, right? Off that low, and then of course up around that high. So we've got to be careful, just like on the S&P, being a buyer there. Very important right now. What's the most important clue in this chart? The trading range. Strong move down. That is a double top. That is a double bottom. Anytime I see double bottoms and double tops, I know it's a range. Once I have my range, I add my range expansions above and below. I know I have a bear bias, which you guys now know means I want to look for that. What was it again? That 1, 2 back up to be a buyer. We're almost there right now. We're almost down to that measured move. If I can then see those bears try once, try twice. Again, it's a bear market, so I got to be a little bit more conservative before I try being a buyer off of that low. Or we go up, right? We go up again, 1 try, 2 try. Again, let the buyers take it higher, get the moving average coming over. The buyers try to buy off the moving average. We know where their stops are, and we're looking to sell right into those stop losses, right? Or maybe it runs 1, 2, 3. The buyers now try to come out and buy this sucker, 1, 2, trap, and down from there. Okay? Really, again, I don't want to call them simple, but very simple idea. Let the buyers walk themselves right into a trap, right? And then once you've got your 1, your 2, right, your 1, your 2, then you find that drop back down into that range. And again, I realize I'm covering these with an illustration tool right now, but guys, I've got hundreds of examples of all of these patterns. I even email you a chart lesson every day as well as part of that free course. So it's a great bargain at free $99. So grab that free course again below the video or linked up in the upper right hand corner, and you'll see a lot more about those patterns, real patterns, right, from real charts, right, we find every day in these markets. Now, what if the market goes lower, right? I promise we talk about that here more on this chart. How can we trust this move going lower if I have that measured move sitting right there, just a few ticks below that 7,300 big round number? What's the plan for that? Well, we talked about the 1, 2, 3 reversal. We need the 1, 2, 3 breakout out of this range right now. In other words, we got to see 1, 2, 3 and run, right? Strong move down, pull back to the moving average. Strong move off the moving average. That will give me the green light that I need, that we're now bearish enough and we're still hunting for lower lows. Mark up that low, mark up that low. Again, mark up that high, right? Find that hidden channel. The hidden aspect is what makes it so special, and then you know where the sweet spot is, and we're trying to sell right up above in that sweet spot, right? It's right at the lowest part of that initial move, and then using the high of that hidden channel, right? That's a great opportunity there for us to be a seller off of that high. Again, though, you're not going to want to sell it as it pulls back right here, though, because this could easily just run right back up into that trading range. All right, guys? So again, don't forget on these E-minis, right? On these E-minis, make sure you get proof of this breakout before you go trying to sell it. And don't let the news media, right? Don't let them walk you into a trap. Speaking of traps, over here on gold right now, gold definitely took one on the Kissa today. Well, I guess that is, or I guess that depends on what direction, right? You're going to cheer on this market right now. A very big bull run here right now. We assume coming right out of the sensationalization of all of the stuff going on right now between the oil, right, and the equity markets. Gold naturally will go higher anytime there's that much fear in these markets. It runs up, it reaches a big round number. Usually whenever we see a strong move in one direction, it's probably going to retest the high, and you'll notice it makes a new higher high. That's a really big clue, right? Because what we know that anytime the market moves with a spike like that, it will probably either be a spike in channel, a spike in range, or a spike into a flag. There are three usual suspects here when it comes to a spike. The fact of the matter is we saw the spike already. Now, how do you know which is which? How do you know which of these situations we're going to get? It all breaks down to, what do you get next? Do you get higher highs? Do you get double tops? Or do you get lower highs? That's what it all boils down to. So when I go back to my chart right now, I can easily see it's a spike in channel, right? I go back to my chart right now, spike up, pull back, higher high. That's a spike in channel. So spike in channel patterns are notorious for one big thing. Spike in channel patterns are notorious for what? For deep pullbacks. Deep pullbacks. How deep? Down to the base of that channel. First pullback right there, right? That's the first level. And then the base of the channel right there. Right where that channel low goes right into the spike going higher. I call this my buy zone, my battle zone, right? This whole area down here now, this is where you want to look for that pullback, right? That big pullback. And what happens is, a lot of times, the market, because this move lower is so bearish, a lot of times the sellers will blatantly think this is a bear market. They'll try to sell into it, and as you can imagine, it becomes a very easy goal for us now to buy right into those stop losses. So a spike in channel can be a very easy setup here for us. So we know spike up, or pull back, or move higher. I'm marking up. That's my channel, right? There's my channel. There's my first pullback there. There's my base right there. There's the battle zone right there. I want to see a pullback, right? I want to see a pullback, a failure, and a move back up. Okay, we'll go more deeper into that here in a second, right? But the one thing I want to mention to you, though, is be very careful buying high right now. Be very careful buying high. Let's take a little bit of a trip, right? A little bit of a trip left here so you can see kind of where we're at right now and why it's so important that we don't get too greedy in here, right? We had a very strong move up, that pull back, and that go. You'll notice I've lined up these highs off of those lows. This is definitely not the world's perfect channel, but a very good-looking channel, because you'll notice we get good rotation. Low to the high, high to the low, low to the high. We have to be thinking now, right? Buyers are waiting down around this channel low. The bottom line is, what really matters most is I don't want to buy these highs right now, right? I don't want to buy these highs. Another very important clue I want to add on this larger channel is it is so large. Now, why is a larger channel something I care about? Well, you'll notice anytime you see a large channel, you can put a midline right in the middle. And that midline, sure enough, acts as great support and resistance. So one of the most common kind of challenges we have as a new trader is to understand there's a big difference between a narrow channel, right? A narrow channel has very little space inside of it. Usually narrow channels will pull back, give you a nice deep pullback and a retest of that high. But when we have a really wide channel, right? Really wide channels like this, those wide channels put that midline right in the middle. And oftentimes what happens is you'll see the market make those big rallies like that, like a big strong move higher. And a lot of times, because the market is so bullish as it's going higher, buyers will come in and they'll buy it off that, right off that midline. So that midline becomes a really important part of this, because when you see these wide channels like this, that momentum has such breadth to it, right? That momentum is so strong as it goes higher that oftentimes we just don't get a full pullback, right? Momentum is so strong as it goes higher that oftentimes we just don't get enough. Nobody's taking that much profit on it. It never pulls back all the way to that low. So you've got to be willing to be a little bit more aggressive on those larger channels. So if I add that larger channel in, and you'll see why this is important in a moment. If I add that larger channel in, I put that midline on it, right? Pay attention to that midline. Right? Because as I zoom in now, look where that midline lines up. It's a thing of beauty, right? It is a Picasso on this chart. Maybe not a Picasso, right? Maybe not a Picasso. That's a little bit of a stretch there, JJ. Right? There's my midline right there. Okay? Keep that in the back of your mind now. Okay? Now, I've talked about the spike in channel. What does that spike in channel tell me? It tells me there's your buy zone right there, right? There's your buy zone right there. What else do we see here? A little tiny trading range. Now, I don't want to overload you guys with too much great information right now, because a lot of this is covered in that free course as well. A lot more deeper dive, of course, along with all the patterns we use to trade them in that free course I mentioned in the upper right-hand corner or linked up below the video tonight. But the bottom line is, what do we do with a trading range, right? What do we do with a range? We want to buy low, right? Want to sell high, avoid the middle. Now, this is a special range. It's very small. Now, we just talked about a big channel and how big channels, right, how big channels make for what? Grab the midline, right? Big channels make for big momentum. Big momentum means it may not pull all the way back. What does a small range tell me? Okay, and this is where you've got to start thinking like a trader, right? What's the most important thing for a long-term trading career? Risk small to earn large, okay? I don't care whether you're a with trend, counter trend. I don't care what market you're trading. I don't care. It doesn't matter to me what type of trader you are. If you get in the habit of risking small to earn large, you have a very successful career ahead of you. Now, why do I mention this? Because whenever we have a small, little narrow range, what's the problem? What's the problem? Space is the problem. Space is the problem. So think about this for a moment. How can I, with a small range, how can I risk small to earn large? Well, in the last chart, we talked about the failure pattern, right? I want to see the market go down. I want to see him go into that range expansion level, right? Let for one, let for two. Wait a second. That's a horrible reward. I can't risk small to earn large there. Now we're on to something. When we have a small range like this, we want to adjust the way we use those ranges. How can we risk small to earn large a big pullback? Why big? Because look, if I can get a strong move down, a very big break out of that range, then I get those sellers to try to sell that pullback. Now, guess what? Now I do have a big reward. Now I can risk small. Now I can earn large. So what am I getting at right now? Yeah, that was a very long-winded way of saying when we have a relatively large size range, I can take pretty much any failure pattern, right? Let the bears try once, let them try to sell off the moving average, and we'll buy right into those stop losses, right? I can use that failure pattern to buy below that low. But here's the problem. When that range is really tiny, right? When it's really, really tiny now, look, I can't do it. It doesn't make any sense. There's no money to be made here, right? And what's the moral story? The moral story is that, right, take more range expansions, right? Take the range, go 1, go 2, go 3, right? That's the area, right? That way you've got more bang for the buck. So a good rule of thumb is whenever you have a really narrow range like this, right, stay away from that range. Get the heck out of there. Let those sellers now, let them try to come in and sell that pullback, and then we'll just go and buy right into those stops. That way we can risk small to earn large. So now put it all together, right? Put all this information together. The spike in channel tells me, right? Spike in channel tells me deep pullback, right? The range tells me it's too tiny to trade high here. Deep pullback, right? And then what else? Wide, right? Wide channel. Yes, use the midline. Now we're talking. I've got a great spot down here, right? At that 96. So remind me here, how can I buy that low? How can I buy that low right now? So now that you know what's bouncing around in this brain of mine, right? With this gold chart, I know I covered a lot on this, and I don't expect you to be able to remember it all, but not to worry. We're going to do it together tomorrow in our trade room. If we do get that strong move down, a lot of times these strong moves down, they'll have 2 legs to them. Right? So think about this, for example, 1, right? And then, of course, a second leg down. Okay, what do? Draw that trend line over it, right? Draw that trend line over it and then get up and over and use it. We call these 2-legged pullback patterns, or a 2LP. You'll learn a lot more about these inside of that free course I mentioned, right? That's your 2LP, your 2-legged pullback. Good example of it back here. Right? Draw that trend line over, get up and over and use it, right? That's the type of trend line, that's the type of pattern you'll almost always see when it's a real deep pullback. Or maybe we get lucky, right? Maybe this thing just runs lower, right? And as it runs lower now, no need to draw the trend line, moving average comes over, right? Bears now try to sell into it. We know where their stops are now. We can buy into those stops, or we can wait and be more conservative and buy the pullback from there, right? That failure pattern into that pullback pattern from there. Don't forget, 1, 2, 3 reversal. Oh yeah, that'll still work, right? Break that down there, mark up that low, mark up that channel low all the way up top now, off that high, right? Off that high, bring it down. Okay, it won't always hit that high. We're drawing off the major high, of course. And then again, there's my sweet spot. And we're trying to sell off of that sweet spot. What pattern would you look for in that sweet spot there? Imagine now if you kind of blew that area up right there, right? There's your trend line coming down, right? We go up. The buyers, of course, now will try to buy the pullback. We look to sell into those stops and back down from there, right? Imagine a bullish failure pattern off the top of that channel, right? As buyers think this market is turning back in their favor again. Now, what if we go higher here, right? What if we go higher here? Spike in channel. There are 2 things you want to think of. 1, if we do keep going higher, draw it up again, right? Draw it up again. Find that new channel. If we do go higher, we're buying off the low of that channel, right? Same basic idea here. Imagine now the moving average comes over, right? Sellers try to sell off of it. We know where stops are, right? We're buying off the low there, right? It's a little bit confusing because a lot of lines on the chart already. But again, if we do make that higher high now, just keep on adjusting that channel. Draw that channel higher, and we're buying off that low. Another thing to keep an eye on is a separate spike in channel, a 1, 2, 3. Okay, that might be the case. Draw up that high. Mark up that high, mark up that hidden channel. Yep, you got it. We're buying off that low, right? Looking to buy off of that low, right off that sweet spot. So lots of different ways we can trade this if this thing breaks higher as well. I'm waiting for a pullback. Hopefully we get it here on that yellow metal. And then last but not least here, wrapping up over here on the euro. I know we're late here in this video right now. There's been a lot to cover here tonight on this euro, so I'm going to make it worth your while for sticking around here for us here tonight on the video. Most important thing right now, we can easily see direction, right? We are overall bullish, right? Overall, we are bullish. The big problem, though, is, right, well, maybe not a problem, right? We're bullish. In a bull market, I love to find those channels. I got a great little channel going on right now. Right now, what do you know about that channel? What do you see with that channel here right now? Right? Undershoot, undershoot, undershoot. They failed to retest the high of that channel. Now, oftentimes when a channel under rotates, right, or as we call it an undershoot, oftentimes those undershoots will lead to an overshoot on the opposite side, right? Undershoot of the high, overshoot on the opposite side. Now remember that, kids, because we also want to, right, put together this range. We go big move up, pull back, double top, pull back. What is that? That's a double top in a bull market. That creates a range. I mark up my top, I mark up my bottom. The original range would have been down around here at first. Once we see that low though, now we adjust that range up. So now we know we have good rotation back and forth. That qualifies the range correctly. What does that range tell me? First of all, it's a bull market into the range. What does a bull market tell us? Buy below the low. Absolutely. Right? What else does it tell me here? It also tells me now I can use those range expansions, right? Mark up those range expansions. Now here's another variation of those ranges. This is a pretty wide range, right? It looks pretty small right now, but if you were to zoom in on this right now, it's a pretty wide range. It's wider than normal, right? It pretty much engulfed the entire, right, day's price action. It's a pretty big range. Now, we talked about how when I have a small range, I double up those range expansions. When I have a large range, there's no need to worry about that lack of profit to make going back to the highs. And so oftentimes traders become more aggressive. What does that mean? Take that trading range, cut it right in half. Take the half, right? Take the half of the range now, and see what I'm doing? I'm marking that down, and that's the spot I'm looking for. Okay, so boy, we've covered a lot here about ranges so far, right? Regular size ranges are a 1-to-1. Narrow ranges, you want to add a couple of those range expansions to give you enough space to get a profit. If the range is really narrow, if it's really large like this, look what they do. They don't take the full size. What they do is they take the half size. They sell off the high there. So I'm expecting now that same half size, right, to work down here. Now, when you combine that now with our undershoot into our overshoot, combine that with our range expansion levels, oh baby, these look great, right? These look great. Another level of support that I love right now is this reversal line here. And you'll notice it hasn't been perfect. Test, 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 test. That's the key test right there. That test puts a nail in the coffin, or should I say, it really solidifies that level as a key level. And that is right there as well. Combine that now with our overshoot, right, into our range expansion. Yeah, this is a great place to be a buyer. The only problem I have right now is the market is moving bearish as we go. So there's a couple things you want to think of right now. One is going to be, let's try to first get into this buy zone down here, at the very least. Try to get into that buy zone, then what? Let that moving average come over. Let those sellers try to sell off the moving average, right? Then we can look to buy into their failure. Don't forget, wait for the pullback. There's your double dip, right? There's your back-to-back setups. A failure pattern, right, into a pullback pattern. Good example right here. One try, right? Sellers going to sell off it, move up, pull back, and go. Same basic idea here as it is here. They're never going to be exactly the same, but they'll rhyme. They'll be very, very similar when you look at it on a chart, right? Next thing, obviously, is what if they hold it, right? What if they hold it and run? Right? There are two scenarios I want you to be thinking about here as we go lower here, right, on this euro. One would be, do they get that big jump off that low, right? If they really run off that pullback, that's a bear market at that point. We'll mark up that low, right? And we'll look to sell off of that high, right? That classic 1, 2, 3 breakout or 1, 2, 3 reversal, right? We've already talked a lot about already. So that's going to be an easy sell. Big round number, obviously, will be our target at 12,000. One more thing you want to think of, though, is if we get this thing, right, if it keeps going lower here, but we can't quite get that follow through, a nice scalp entry with a big runner target, be a 1, 2, and then buy back up. So rather than waiting to get the entry back at the stops, you really don't want to be trading inside that range, right? You want to stay outside the range. Ideally, if we do get that run lower, look for those bears once, twice, and that'll give you a nice little early entry on that into that trading range as we go back up into that range. Now, how do we sell off the high? How do we sell off the high? You want to see him try twice, right? Remember, we're bullish right now. So if we go higher here, I'm going to let those buyers try once, try twice. Yeah, then I can sell, come tumbling back down into that trading range, right? Same basic, we call that a nested failure pattern. All right, guys? So don't forget, it'll be a 2-try failure off the low, a nested failure, right? Or maybe we get that 1, 2 go, and then not so fast, 1, 2 back up. Or does it blast through, channel, sell, target at the big round number? What a great video. What a great newsletter. What a great plan. Excellent work. And if you're still watching this over an hour-long lesson right now, I'll tell you right now, you are exactly the type of people that I love to work with. Hardworking, dedicated, and you finish what you started. Guys, if you're anything like me, right, and you want to be consistently profitable every day that you trade, make sure you join us tomorrow morning in our trade room, 8 o'clock Eastern time. We open up every day, Monday through Friday. If you're not a member here at School of Trade, or you're not ready to be a member yet, but you want to learn more about this strategy, grab that free trial. Right to the left of my ugly mug, I think we have the best free trial in the business. As part of that free trial, you'll learn our 3-step strategy, get that free trading course, get a free pass, come out and join me as a guest in our trade room, and you'll learn all kinds of goodies as extra bonuses for joining that free trial. So make sure you join the free trial or take the plunge and let's do it together. Grab that advanced course right below me tonight on the video here on the website at schooloftrade.com. Grab that advanced course, get registered. There's a short orientation so you can download all the tools, and I'll see you tomorrow at 8 o'clock Eastern time. If not, I'll see you guys tomorrow night, same time, same place. Hope you guys enjoyed the video. Have a great day tomorrow. If I don't see you guys in the trade room bright and early, 8 o'clock Eastern time. And as always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.